Welcome back, and joining us for a look at the day's markets action is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. Of course, it is the day after the election results were announced, the first day of trading for the month of June. Markets seem to be in a state of calm. Even when you look at the rand, it has strengthened more than 1% against the dollar. Is this the calm after the storm or the calm before the coalition storm?
Yeah, thanks, Anati. I think what we're seeing today was a bit of a reversal from last week, where there was a bit of a sell-off. Initially, when we had, the ruling party losing quite a bit of support, coming down to that 40% level, there was lots of nervousness. But what we've seen is, there's been statements from all of the parties that they're going to be talking to each other, looking to do coalition deals or some form of forming a government. And so far, it's been a peaceful transition. It's going to be a bit of a nervous wait until all the talks are concluded and Parliament is enacted. But I think we've seen some encouraging signs that so far the transition has been quite smooth. There's been strong statements from the president that we need to abide by the constitution, and I think what we're seeing now is a bit of buying coming to the market, with the domestic shares doing particularly well today following the final announcement of the election results.
All right. Well, Imtiaz, also just still on macro before we come to company news here on the JSE. Something big. The European Central Bank actually expected to be the first, I would assume, major central bank to cut interest rates, and of course something that is kind of unusual since the Fed usually starts off the trend there. What are you making, and do you think that even though the inflation print for May came out slightly more than expectations, the ECB will still be resolute on cutting interest rates?
Yeah, so I think what we've seen is, the European economy has been a bit weaker than the than the US overall, but inflation has started to come down, so there is some room for them to start cutting interest rates. I think it's going to be a bit of a shallow cutting cycle and a very slow cutting cycle. Whilst the Fed is still very much in a data-dependent mode, although inflation has come down, the US economy has been very resilient, and that is fueling the growth that we're seeing coming out of the US. The higher rates haven't started having a major impact, although we're seeing some early signs of that impact coming through. So I think there is room for other central banks around the world to start easing interest rates on a very cautious basis.
All right. Well, let's talk about company news, and particularly Brait, because it was punished by the markets by about 16% the last time I checked. Of course, it announced a recapitalization plan there, talking about an extension of bond maturities, but also seeking a rights offer there, I think, if I'm correct, of 1.5 billion, if I am correct. What did you make of that, and also the market's reaction on that front?
Yeah, I think this is not the first time that we've seen Brait come out with a rights issue. The two major businesses that are underperforming are Virgin Active and New Look. Virgin Active is the gym business, which has had a torrid time since COVID. And although we've seen activity pick up, some of that operating leverage is not coming through as strongly.
Yeah.
And New Look, which is a retailer in the UK, that also went through quite a tough time, especially during COVID, but also post-COVID. So they needed to invest in some of the prices, protect their margins, and that recovery has been quite slow. The other business, which is Premier, that's a very good business that is doing well. But overall, Brait has a lot of debt on the balance sheet, and they need to repair the balance sheet. And a lot of this money that they are raising is going to go towards debt repayments and funding some of the working capital requirements in the short term. So I think it's not for new growth opportunities, although there might be some small opportunities, but essentially you're plugging the hole from balance sheet perspective rather than from a growth perspective.
All right. Well, talking about growth, it seems that there was growth in Fairvest in the interim period. They did have some good metrics, their LTV improving to just over 32%. They did also mention that their distribution per B share for the full year will be at the upper end of guidance. Do you think that this property company is positioned well at this point, even with all the headwinds in the macroeconomic environment?
Yeah, I think if you look at Ferris, it's well managed and well run. They are more heavily weighted towards the retail sector. If you look at retail, it makes up 70% of their revenue stream. And retail has been the one pocket that's been a bit more resilient than office. Office has been, impacted by the work from home phenomena, and the recovery has been very slow. We have a lot of excess space in that segment. So that has been a bit tough. But looking at Fairvest, they managed to grow their earnings. They're paying out 100% of their earnings. The loan to value is still on the lowish side compared to some of their peers at 33%. And you're seeing rental reversions being positive, which bodes well for future earnings growth. So I think overall, well managed, very decent balance sheet, and they are on a path towards recovery.
All right. Well, let us get to your stock pick for today. What are you hanging your hat on today, Imtiaz?
Now I'm going with a US stock. It's called Ulta Beauty. They're a US retailer, which is essentially they sell beauty products and they also do beauty treatments in-house. The opportunity for growth is still very strong as they roll out new stores and look at other regions. They're looking at Mexico, for example. They're very strong in the US, and they benefit from, I guess, the culture of the Instagram stage that we're living in, and that fuels beauty purchases. They have a very strong, loyal base of 43 million customers. And I think earnings growth will be in double digits for the next 3 years. And that provides a good opportunity for the likes of Ulta.
All right. Well, thank you so much for your insights today on what has been moving investors' money, Imtiaz. That was Imtiaz Suliman from Sentio Capital.